Okay, so let's see how that we're going to calculate for our provision for realized profit. So based on this scenario, what we're going to do is that let's bring the goods that we sold to the subsidiary, 4.6. Then the subsidiary has sold 2.5. So then we multiply it by the let's say the 4.6 of the goods that the parent sold. But the parent, in the parent books, the parent is having what? The goods supposed to be 3 million divided by the 4.6. So when you do this one will give you something like the profit. This one will give you the percentage. So you just have to multiply it direct. You just have to multiply it directly in this one. So you're going to have your calculation to be the 4.6 minus 2.5 is going to give you 730. So let's take it, let's say 730. There is some decimals that is supposed to add, but let's end it here. So for 730. So this one will be our provision for realized profit, and this one will have impact when it comes to the group retained earnings, because that is the parent who has sold to the subsidiary. Therefore, this 730 will be deducted when it comes to the group retained earnings. So, ladies and gentlemen, this is how that provision based on the part I of the additional information is going to be calculated. Don't forget that the 4.6 million will be subtracted from revenue, and the same figure will be subtracted from cost of sales as well. This figure will be subtracted from the group retained earnings when we are working on it. Then also, the other thing that we're going to do is that we need to also go and make sure that we are adding this 730, which is PUB, to our cost of sales. Then the same figure will be deducted from our revenue when it comes to the group statement of financial position. This is how the treatment is going to be done. So, okay, let's proceed on. So the next part, that's the part III, is saying that on the 1st of July 2024, ABBA received a grant from the government. So the ABBA, which is the parent, received a grant from the government, and the grant in the form of what? A building. So the value of this building was what? 5 million, with a usual useful life of 20 years. So grant. The grant is what? 5 million. And the grant is going for how many years? 20 years. So let's proceed on. Grant council, whereby grant forms under IS 20, government grant. So when it comes to grant, there is a lot that we're going to discuss. As I've already told you guys, that when you start with the standards, the IFRS and all the standards, you're going to go through the grant, all the other aspects of the standard. So